As you've seen the financial services evolve over time, what personally excites you most about the rise of embedded finance? Hi all, we have today with us Mr. Satyam Agrawal. He is the Managing Director, Global Head of BaaS, SME and Analytics. Satyam has over 2 decades of experience in banking and fintech. Satyam, my first question to you, what personally excites you the most about embedded finance, as a stream in financing?
The most exciting bit for me is it's a collective push to innovate to deliver a better customer experience to the SMEs at a place where they're doing their business. So 65% of SMEs globally have started using a fintech platform outside their regular bank, which means that SMEs are also becoming demanding and they want to see more innovation kind of coming from banks. So now if you look at what's enabling it, so firstly, the whole advent of open APIs, where platforms are able to offer, data in real time. Now, if you put that along with a digital public infrastructure, where we are also now able to access not just the source data from the platform, from where these SMEs have come from, but also other data, both on tax infrastructure, credit bureau, alternate data sources like telco and all of that. And then that put along with the whole AI, right, which just makes processing of this entire set of information a lot more smarter, faster, and more predictive. So if you put all of this together, I think it's exciting times, and hopefully at the end of it, our SMEs will kind of benefit from it. What also has to be kept in mind at the end of the day is the trust element, because these SMEs are now trusting us, or these platforms are trusting us with a lot more data. So there's a fiduciary kind of a responsibility that all of us carry to protect that data.
So, Satyam, how do you see this opportunity in embedded SME finance evolving specifically in the emerging markets?
Embedded SME finance is actually an opportunity globally. However, if you look at particularly at the emerging markets, which is where predominantly my professional experience has been, those are the countries where you have the highest or the biggest gap in SME finance, where most SMEs or a large proportion of SMEs are either unserved or underserved. And embedded finance just becomes the right way, or one of the key ways of kind of solving that problem.
So as the technology is evolving, government infrastructure is evolving with it. So I would want to understand your take on how DPIs are evolving and what's the role of AI in this process.
So if you actually put all of these things together, it just creates an enormous opportunity for lenders to solve the perennial problem of SMEs being underfinanced. And the challenges in the past has been like access to SMEs at low cost, access to reliable data at a very low cost. Now, with embedded finance, you are able to tap into ecosystems or platforms where you have congregation of these SMEs. You are able to tap into the data that's sitting on that platform. And it's just not that. With the emergence of digital public infrastructure, and if I take markets like, let's say, India, China, Vietnam, you do have a very maturing indirect tax infrastructure, which gives access to a lot of valuable information that the lenders would love to see, and it's available just with a simple OTP consent at a click of a button.
Right.
Now, to process this large amounts of data in fraction of seconds or minutes is where the whole processing capability plus AI comes into play. So now if you put all of these three together, it just feels like we are again in exciting times, for the, it's going to be exciting times for the SMEs.
Amazing. So it feels like the tech stack for enabling embedded finance is now there, and eventually this will evolve to serve the SMEs better. Satyam, across your experience, you've implemented embedded finance for a lot of large banks. What are some key learnings from these banks, implementation in these banks, and how do you see fintech banking partnership playing out going forward?
So with embedded finance, you naturally are looking to partner with platforms, ecosystems, which are external. Now, what is definitely needed is the agility to quickly go to the market and have the first movers advantage. So one of my key experiences has been that if you invest too much of time and resources on one partnership without fully knowing whether it's going to be successful or not, it's a significant risk that one would be taking. Hence, having the agility, the muscle power to quickly partner with multiple platforms, and then going deeper into where you see the maximum opportunity would be the key. Now, when it comes to a bank and fintech partnership, I think the thing that's kind of, to my mind, it's evolving is you're living in a situation where a platform is originating for you. The capability actually can be provided by, can be developed by the bank, or it can be provided by someone else. And banks or lenders would have a key role of kind of providing the balance sheet. Now, if you tie this up to my first question, there are a number of fintechs today who have kind of, with agility, solved for a lot of these challenges. So while you partner with a platform to originate, the capability layer could be very quickly provided by fintech partners with or without some balance sheet exposure. But what's most important is they just enable the bank to quickly go and work with multiple such originating platforms to test and learn,